Okay, all right. Okay, we'll just start with where we were before. Let me figure out how do I get rid of the video?
Okay, let's turn off the video then. No, for us it is necessary, right? Because otherwise we are not nodding.
But no, I just don't want to see this video in the side. It's okay. Anyway, you guys are not seeing that, right? It's fine. Uh, yeah, I'm not recording your faces anyway. It's okay.
No, if you record also, that's fine.
Yeah. Okay. Okay. All right. So I just wanted to start with okay. So this is what we learned last time, right? Buy side liquidity, sell side liquidity. And basically these are all the swing points, right? So this part you understood. And next was the fair value gap. Okay. So you can use an indicator or you can do it on your own. Normally, what they say is initially don't use indicators simply because you need to train your eye.
Hmm.
Okay, but then it's fine. It's for you. Meaning use the indicator once you for confirmation, so that you think it's a fair value gap or not. Right? First draw it, and then next time put the indicator, and then you can use it to confirm that yes, this was a fair value gap. Okay. So that'll be a better way. So at least that way you get a better understanding of how to draw these fair value gaps if you want. Okay. Again, this is a volume imbalance and a liquidity void. This was also present in uh, in the tradings, right? So this was also there. So any questions on these concepts? Any
No,
doubts still, or
I think it's clear.
yeah, clear?
Yeah.
Okay. And this part, bodies tell the story, wicks do the damage. Just remember that as and when start looking at the price action, right? Then you'll start seeing why this one starts becoming important. Okay, because if you look only at the wicks, then you'll think, oh, maybe it will go down, maybe it will go up, but then you'll realize that that's not really the true story. Okay, so this will become important going forward as and when we look at more price action. Okay, so apart from this, there's one, well, actually three concepts, but they're related. These are called order blocks. Okay. What are order blocks? Order blocks are essentially, look at it this way. You have a bullish leg, okay, or a bearish leg. In this case, this is a bearish leg, right? So where will institutions buy? Okay. So and they have to indicate some other means of saying that okay, fine, this is the place where we want to buy before price goes too high, right? So how do you identify that? This you can identify simply because in a downtrend, typically the up close candles, see these two white candles here, these are the order blocks. Okay, it's here, it is here. Okay, these are the order blocks. On this side, the black candles are the order blocks.
Hmm.
Okay, not all the black candles are order blocks, but especially the bigger ones, most of the times are order blocks. Okay, so basically, in when things are going up, the candles which go down are tend to be order blocks because that is where institutions are jumping in and buying before the price goes too high. Okay,
And it
so
does not matter how big or small is the tick.
no, it does not matter. Okay, it does not matter, but you will start realizing that the bigger the candles, the better they are. Okay, you will have to identify which is a high probability order block and which is not a high probability order block. But for now, don't think about it in terms of high probability or low probability order blocks. Okay, just try to understand that in when the price is going up, all the candles which go down are order blocks. When the price is going down, all the green candles are essentially order blocks. That's the way you need to look at it.
Mhm.
Okay,
What happens with orange candles?
there are no orange candles.
No, like there are three, right? Sometimes it's
No,
not black, it's not.
no, there are always only two candles. In
Oh,
this, in my example, it's black and white,
okay.
or you'll have red and green. That's it. There can't be any other color.
Okay.
Okay, you might have defined it in your script to paint a different color for whatever
Oh,
reason.
okay.
Okay, but there's no other color. There are always two colors.
Okay.
Okay,
So essentially, in other words, it's like when a market is going down, there is a tendency for to buy. When market is going down, then they're trying to buy certain chunk of stocks that
mm.
creates an order block, right? If it is going
Yes,
down, people
exactly.
trying to buy.
Mm.
If it's going up, so that they kind of buy at one shot so many things, so that
Yeah,
it kind of stays at one rate and then suddenly jumps again.
exactly, exactly.
Okay.
Okay,
Then the
so
other question before you move forward
mm,
is order block would be always a pair or it can be
no,
single.
it can be a single one also.
Okay.
Can be a single one also. Okay,
Hmm.
so typically we'll go to the chart soon, and then it'll become a little more easy to figure out which ones are the order blocks and which ones are not. Okay, but in this case, if you see, these two candles are high probability order blocks. Okay, because they're definitely going against the trend, right?
Mm.
So that means they are selling before it goes down further because they don't want to risk. They're just finishing up their job here only. Okay. So, and they started their job here. Practically, this last candle, last up close candle, is also order block. Okay. Before price started going down.
Uh,
So, normally, when I'll show you an indicator. Okay. Which basically will tell you how many orders were there in this particular place. That'll give you the confidence. Oh, okay. Now I understand why we're calling this an order block and why not some other thing. Okay, and even when if you just put the volume on the chart, right, you'll also see the candles where the most volume is, right, are typically these candles. Okay, lots and lots of orders tend to get accumulated or executed among those candles, and those candles tend to be order blocks.
mm,
Okay, and I found one nice website which has a lot of information on order blocks and other things, and even fair value gaps, and etc etc. Okay, at some point of time you can just go to that website and also read about it. I thought it was a pretty decent website. Okay, so whatever I written here, order block is defined as a change in the state of delivery in the market. It marks a point where the market transitions from one trend to another, typically from bullish to bearish or vice versa. Okay. So in this case, it went here. So this last up close candle is considered an order block. Okay. Because here it trend changed and started going in the opposite direction. Okay. And here, this last down close candle, this last black candle is considered an order block. Okay. So these are typically the highest order blocks that you actually look at. Okay. And now just remember these candles and these candles. We'll get to that in the next one. Okay. I said that these are also order blocks, okay, but they are actually what we call failed order blocks because they did not change the direction, okay, but they are still useful because still a lot of transactions, a lot of orders have gotten accumulated in this region, okay, so it's still in the whole price action. These tend to still remain relevant, and they will offer support or resistance as and when how the price moves. Okay. So these candles which are there in the middle typically are called breaker blocks and mitigation blocks. These are two very specific kind of order blocks. Okay. So a breaker block is extremely important simply because it tells you that once this breaker block forms, it's a good place to take an entry. Okay. To actually buy or sell, you look for breaker blocks, which is the closest that you can get to buying at the high
mm,
or the low. Okay, so that is why breaker block becomes very important. Okay, and it has the highest probability if you can recognize it and take a trade at that point. Okay, a mitigation block is basically a place where again it's a failed order block, but it is still a place of price significance. Okay, and typically what happens is you use mitigation blocks as a target because price will tend to go to that point. Okay, it always tends to go to that point and then moves on from there. Okay, so mitigation blocks are typically points that you will use as targets. Okay. And you will see when we look at the charts, right? Sometimes you will see that price goes up to a certain point, and then when you look towards the left, you'll see a mitigation block, and that will be the reason why price stopped there and then kind of like stayed there or decided to take a retracement and then went up and things like that. Okay.
So in terms of like to go back to that slide number 11, so I
Mm,
got the order block where
mm,
it is trying to shift.
mm.
So the both 12th are same, right? Matlab, they are also the same mitigation is the same thing, right? There is
They're all auto blocks. They're
they're
all
all
auto
possible,
blocks
right?
in
Yeah.
that sense.
Yeah.
It's just that there is an auto block which has not failed.
Hmm.
Okay, which actually changes the direction
Hmm.
from bullish to bearish or bearish to bullish. That is a proper order block. Okay. And then there are ones which are failed, which become either a breaker block or a mitigation block.
So in this
But
case, the white one is a breaker block, right?
this one is a breaker block.
Yeah,
Okay. And this one is a mitigation block.
because they are
Okay. In
able to
this
change the
example.
trend.
Okay. I have a few more things. I'll go to that. Okay. Okay. So this is an example of a breaker block. Okay. So basically what happened was this was an order block because this was the last down close candle, right? So this was an order block. So and then price went up and then it went up, came down. It supported price at this level. See, they did not allow the price to go below in this case. Can you see that?
Yeah.
Okay. So in this case, it supported and then price went up. And then what happened is it came down. The minute it came down below the order block, okay, then this became a breaker block. Okay, this became a breaker block. And as you can see, now it is offering resistance for things to go higher. Okay, so this is where you will say that, okay, in this place, they're still going to take on some orders, so they will stop you. Then they'll keep trying to push you down here. Okay, so this is one of the places where you will try to take a order, where you can take a trade typically. Okay, so you have to be able to recognize when a breaker block is possible. Okay, did you get it?
Yeah.
Mhm.
Okay, then I'll
So
show
at
you.
some point, if you look at the top, those breaker and everything got zigzag, right? Like,
Yeah.
uh,
So what happened was here also, if you look at it, right? So
uh,
how do you actually recognize a breaker block? So this is the highest high. If you look at it, actually,
uh,
okay, this is the actual high. Okay, and this is the low, and then this went up and then came down.
uh,
So this candle here, okay, which is in this leg, actually became the breaker block. Okay, that's typically the thing. I'll show it to you on the charts. It'll become a little more easy.
uh,
Okay, go to the charts after this. I just want you to get this idea
yeah,
that the breaker block basically when it is offering this kind of resistance, it is still an order block. Okay, because order blocks offer resistance for price to move in in the opposite direction, right? And the minute it starts offering resistance levels, then it becomes a um, breaker block.
mitigate.
No, this is a breaker block. The
Oh,
mitigation block I'll come to next.
uh,
Okay. So here, this is acting as a breaker block because it is offering resistance. Okay. But you can also call this a mitigation block. Okay. Because what is happening here is that it went here, it stopped it, right? But if you look at it from here, okay, and you decided you want to take a trade, right? You have to decide where you want to go. right? So this was one high, right? And this was the next high. That is one way of looking at it. So what will happen is sometimes you'll also see cases where there are only one candle or two candles, okay? But it's not really that big a high. These are short-term highs, right? So then what you will see is price will reach that, come back like this, and then continue. In this case, it came down and continued. So this actually becomes a mitigation block. Same thing here. This single candle, okay, it came here, it offered some resistance, came back down and continued through, right? It continued through. So that is the reason this became a mitigation block. Okay. So these are good targets to achieve because here, see, if you had just taken this in this candle high as a target, okay, this particular candle as a high, and if you said that, oh, I want to hold my trade up to this point, what would happen is it'll go there, it didn't go till the end, and then just came back. The reason it came back is because this was a mitigation block. Okay. So it went here, and you should have exited your trade here if that was your objective. Okay. But a mitigation block, sometimes what happens is also price comes back and then goes right through it, which is also fine. So if you can hold it, and if you don't panic in between just because it's coming back, then you can just say, okay, at this mitigation block, I can take my trade off.
Yeah. So mitigation block in behavior wise, what is happening underlying?
Basically, they act as targets. Okay. But main thing is they will be traded through. Okay. Breakup blocks, they will not get traded through.
Yeah, no, in sense like in originally what is happening in the trader mindset, like they are trying to buy too many, they're trying to reverse, they're trying to buy so many that they can reverse the trend altogether.
So basically, what is happening here is that
Buy or
if
sell.
people have accumulated orders,
Uh,
okay, for example, they wanted to go long, okay, they wanted to go long, but then it started going down. They don't know what to do. They're still holding against hope, okay, but it went so far down, now they are losing hope, okay, and then when price comes here to the mitigation block, they'll say, hey, let me at least break even. So they
um,
start selling their positions. So that is why you suddenly start seeing a move down,
uh,
and then
yeah.
market makers push it back up.
uh,
So here, some traders will try to mitigate their losses.
uh,
Okay, so that is why it's called a mitigation block.
okay. Okay. Yeah, no, when you explain like that, it makes a lot of sense. So, okay.
Okay, so this is a mitigation block. Okay, with with at least so much, just fair value gaps and all the gaps, old highs, high lows, and an understanding of order blocks and these. Now you can take up any chart, and then you'll be able to figure out, okay, what the hell is happening in this chart.
Yeah. So, so the breaker block in similar context, what is happening? So they're trying to buy like the
A
second breaker block, right? So that is
breaker block is essentially where they have accumulated orders. Now they're no longer in. They don't want you to trade to it because they don't want to mitigate. They want to push the price down.
down. Okay.
They want to push the price wherever up or down. They
Uh,
want to push it away
uh,
because they have accumulated orders at that point.
uh,
Okay, but price went up, whatever, and then again came down. Okay, but came down, but they have basically, for example, I'll go to the previous one. Here, what happened was they sold, they or rather they accumulated their orders, okay, and they took a short. They took shorts here, okay. In this whole region, they have taken shorts, okay, and in this region. So now they're saying that I don't want price to go up here and then I will end up in a loss because if it starts going in the opposite direction, then there will be in a loss, right? So they're saying this is my last point beyond which I will not allow you to come into my domain. I want the price to go in the opposite direction because then I can make money. So they force the price at this point to go down. So that is why they're breaking the will to force people to go in the other direction.
because they have taken sell
Yeah, they
option.
have taken, in this case, they have taken shorts.
Hmm.
Okay. And this whole structure is essentially place where all of them have kind of all market makers have gone around and tried to take their positions in this whole area. Okay, they don't want price to go back into this area that easily.
Mm.
So Vinay,
Hmm,
let's say when the candle is too long,
hmm,
that means the buying or selling is happening in millions together, like in
yeah,
terms of volume.
yeah. There'll be a lot of volume, yes.
And when it is small, probably some 300, 400K, something
Yeah,
like.
maybe, but not necessarily.
But
So
Because
the
sometimes
other
you'll have a
question,
very small candle, but there'll
yeah.
be a lot of volume in that candle also. It's
So
just that
let's
they just have accumulated most of the orders within a short span of time.
so is there even a thing wherein, like, let's say breaker block versus mitigation block,
Hmm.
the volume would it vary too much? Like, is there any
Yes.
identifier like that?
Yes, it is. You can identify. Typically, what happens is the order blocks at the very top will have the most volume. And any other candle that you see, right? Any other order blocks that you see in between tend to have lesser volume.
Okay.
Okay. Typically,
Hmm.
typically. Okay.
Yeah. While you are talking, I'm trying to see for today,
Hmm.
because today whatever chart you are showing, right,
Hmm.
Rob, it kind of matches to what are similar to what it is today.
Hmm.
And then I'm just looking at the volume. Yes, it kind of is giving what you're saying.
so why is that the top one has larger volume and lower one has smaller volumes? How the volume current corresponds? Less people are buy. Nazir, any idea?
Yeah, if I understand, probably the volume is low. People don't want to, the hedge funds do not want to buy or sell during that particular period.
When it is higher.
Yeah,
Uh-huh. Right. Okay.
I don't know. Probably Vinay should say.
Yeah. Just hold on. Just trying to set this thing right.
Yes one. Okay. Oh, yes one went up, huh?
No, no, this is a daily chart.
No, even in mind.
Yes, one now it went up.
Yeah, I don't.
I'm just trying to switch windows. Just give me a second.
Okay.
Okay. All right. You can see my trading view.
Yeah.
Okay. All right. So this is the daily chart. Okay. Um, okay, let's just go through what happened today. So this was the day, today's price action. Okay. So what happened on ES was that, there was this daily imbalance here, right? The daily fair value gap here. Price went all the way till there, exactly till there. Okay. And then came down. It came back into actually this fair value gap, if you look at it.
So you have taken weekly one or daily one?
This is daily.
Daily.
You see it?
Yeah.
I'll remove the other ones so that it's less confusing. Okay. You see it?
Yeah.
So today, the what happened was that it went up and it's almost close to the top, right? You'll always find some resistance here. Okay. So if you
Oh,
look at it, there's this also. What is this?
yeah.
An order
So
block.
order block. Yeah.
right? In this leg, this down close candle is an auto block, okay? Or in this case, it's also a breaker, okay? The other breaker that you have is somewhere here. Oh, sorry. This area is another breaker, okay? If you go lower, again, this area is another breaker, right? On this side, okay?
Uh,
And if you look at this one, take only this candle because this is the largest candle, right? The highest high to the lowest low, put it across. This was a mitigation block on this side,
mm,
okay? This also acted as breaker as well as this actually acted as a mitigation block in this sense. Came here, reached the middle, right, of this, then went up. So this was a mitigation block. And then it decided to come down, came here to the next one, again found resistance because this again is a mitigation block, then went up. And then it finally traded through. It ignored this one, okay? But then it came all the way down till here into this order block,
mm,
okay? So now you can start seeing why did it wick, okay? Why did it wick beyond this fair value gap? If you look at it, this was a fair value gap, right? Okay. Why did it wick all the way? Because it came to take the orders that were sitting in this order block here. So it came all the way down, came till here, okay? And the very last order block was this. But this is where they would have accumulated their orders. So they did not allow anybody to come till that point. They said, I'm still long. If you want, you come till here, but then after this, you better go higher. Okay. So this was the order block. Sorry, this one was the order block here. This whole thing, actually. This was the order block here. Last up close candles in a uptrend. Okay. Sometimes you'll choose one, sometimes you'll choose the entire leg. Okay. But inevitably, always look at the leg, especially if it's slightly smaller. This. Okay. Because see, this went all the way down, and this was the highest. Okay. But if you look at it, this whole thing is the order block. This is why price also went up till here and then came down. Okay. And just like in for fair value gaps, there is the midpoint becomes very important. Similarly, for order blocks, also the midpoint does becomes important. Okay, uh, but we call this differently. In For fair value gaps, we call it CE or consequent encroachment. Okay, the midpoint of an order block is called a mean threshold. Okay, usually abbreviated as MT. Okay. So what happens is what some people do is they do only the bodies like this. They use only the bodies because, like I said, only the bodies is where everything happens, right? Okay, and wicks do the damage. Some people do this. Some people only do the wicks here. They say only this last spot is good enough for them. So people have different ways of marking it, but um, normally what is recommended is that you do the bodies, especially if the wick is very small. Okay, but if you have a large wick, then do the wick also. In this case, I would do the whole wick, thing. But when you do it, you have to do wick to wick. If you're using the wicks, then you do wick to wick. Okay. Normally, what happens is The body is big and the wicks are small. Then you just use the body, but
Hmm.
you use only the body then, or to just for open to close. Okay, these are the different ways of drawing the auto blocks, or the same thing holds for the mitigation blocks as well as the breaker blocks. Okay, so in this case, the breaker block would be actually uh, probably this one.
The black one.
Yeah,
Yeah,
this would be the breaker block here.
because that brought the trend down and it
Yeah,
went up
yeah,
again, and then
yeah.
there is another.
So, like I said, right, this is where you would have had to take a cell. If you had taken a cell here, then you could have taken it up to this point somewhere. And again, this is a mitigation block,
Which is a mitigation block here?
this one, this candle.
Hmm. Oh, you are in 31st July. Okay.
Yeah,
Yeah.
because this went up, right? So this is the largest candle. Okay. So I use this as the mitigation block. So if you look at it, it came here up to the mitigation block. Okay. And then kind of like it's stopping. So now, to be honest, I don't know what they're going to do, but quite likely they will go forward again. They'll move upwards again. Or it'll just keep going up and down in this area for some time.
Hmm.
Okay. So now let me get rid of all of this. We'll go to a smaller time frame.
Yeah, then then watch, right, exactly how the candles are shaping up. Is that what you're thinking?
Yeah. Let's see. We'll try a 15-minute time frame. Okay.
So how small you can go a minute?
I can go to 15 seconds.
So can we see the trend in 15 seconds? What is happening?
No,
No.
it'll look like this. Okay, but it's the same thing. It's the same information. Okay, it's just that the way it gets presented is you can still find order block. You will still find fair value gaps. Everything, even in 15 seconds. If you look at it,
So
fair value gap.
can you see that because the lines will be drawn, right? The lucky ray will be drawn as we speak. So
So the fair value gap.
the fairly gap.
Okay,
Yes.
on a 15 seconds.
Uh,
Okay, this was a high. This was the low, or rather, this was the low. So your breaker block is also somewhere there only here only. I know probably somewhere here. I think this, yeah, sorry, this is your breaker block,
uh, change the trend, right?
right? This is your breaker block.
Mhm.
So it
And,
doesn't matter what time frame you go to,
and somewhere down, this is a
all these
mitigation
concepts
block.
will exist. Okay. But basically on 15 seconds, you will not be able to take a trade. It's very difficult.
Uh,
Yeah.
but
It'll
this is not
become very
more,
difficult to take a
more
trade.
about the trade, but it's more about
So let me
seeing.
go to 15 minutes. Let's see if we can figure something out. Okay. See, this is 15 minutes time frame. High, low, higher, high. All right. This is your breaker block. This is the last order block. See here. Price went exactly to this, the midpoint of this, exactly to the midpoint, and then went down. You see it?
Yeah.
Even though there's a fair value gap here, even though there are volume imbalances here, you can see the volume imbalance. There's a volume imbalance here also. Okay. And then there's a big fair value gap here. They did not allow it to go higher. They took it all the way till here, up to the breaker block. Since they didn't allow it, this order block became a breaker block and it came down. Yeah. Let me try. Let me see if I can put a indicator.
A breaker block.
I don't know. Yeah. Small.
So what are the indicators? I'm new to this.
What is CHOCH?
Don't look at that right now.
Oh, okay.
Just trying to see if it will give me the information that you're looking for. No, this indicator is not giving me the information.
When I try one more, I will tell you.
Hmm.
Try order block detector by Luxalgo.
Block detector. That's okay.
It kind of marks that line
No,
under.
it marks. I'm not looking for that line. I wanted something else. No,
This will not work.
yeah, I have something that I paid for. Let me use that only. That I know gives me that information. Ah, so this is a paid indicator that I have that I use from Luxolgo.
Trading is much sophisticated, huh? So there are third-party algorithms that are there. Huh?
Mm, mm. Ah, so basically, what this is showing is the number of orders that were available here. 166K of the last candle.
Mm.
Okay, they're saying so. This indicator, okay, the reason I don't like it is because they show only the wick, but it's actually this whole candle. But it's okay, it's fine. That covers the important area anyway. So 166K orders. Okay, there. This small one here also. This is essentially a mitigation block. Is 6K orders, 6.134K. Okay. Here again near the breaker block, 224K orders. Okay. This was an old mitigation block. It came here. They're
So,
saying it's around 40K orders. So there
so
were around
what it
11K
doesn't tell
orders
me
here,
is that
5K, 21K,
mm, no, the 6,000 order,
173K.
right?
Huh? So for example, here this is 173K orders,
Uh,
right? So that means a lot of orders got executed in this region. Okay. So that means that If it comes down here, then it's going to be super critical. If they don't push it up, and if it crosses this one, then it's going to go down a lot more.
Okay, okay.
Okay.
But the
It can
six
go through
point
these.
three,
It can.
right? The six
Uh,
point three that you showed on the top, and
uh,
it is kind of a mitigation block there because
yeah.
it reverses the trend.
Yeah.
So why is that 6.3, which is such a small number, so significant that it could change the trend?
It can, meaning it's just the number of orders that are there. If you look at the other candles, it's quite likely that the number of orders in those candles are not that many.
Okay, okay.
Okay. But it's also because it is so small, it actually managed to go through it. So what actually happened here was that it came here, went back to the mitigation block, took some of the orders, and then went down.
Mm, okay. So good. Sorry.
Okay. So this is essentially how you use the thing. So you can, if you look at it here, right, you can also think of these also as breakup blocks if you want. This one, or rather, I think it's better to take this one only. This whole thing is a breakup block. If you look at it, or a mitigation block, either way. Okay. I would high, low, higher, high. So actually, I would use this one. Okay, perfect. I'll get rid of this. Okay. These. This be here. So if you look at this here, okay, I looked at this candle as the breaker block. Why? Actually, because it's from this high, this candle high to the bottom, okay, to the low. I use
Mm,
this whole area as a breaker block. Okay. If you look at it, price came down, went up into that area. So practically that means from this point onward, they did not allow price to ever go back up. Okay. This one tried to go in, it came close, but then just came back down.
mm,
Okay. So this small one that you see here is also an order block because it's in the opposite direction, but this is not a major high priority order block. Okay. This whole thing will soon become either a breaker block or a mitigation block. Whole thing. Because why? Because it failed to go higher. Okay. And it came down. It's a right now just an order block. This whole thing. Okay. Uh, or you can only look at the top one also if you want and use that as a basis to topmost candle. Okay. So this will either become a breaker block because if it tries to go higher and then comes back down, sorry, this will become a breaker block. Yeah, this one will become the breaker block, which it seems to be doing actually. It's not allowed price to go higher yet. Okay. And if it goes through, this will become a mitigation block. So you can expect price to go till here and then come back down and then go higher again.
mm.
This small order block can also act as a mitigation block. Okay, so that'll be your next target. So it could go till here, then again have a minor rollback, and then it can go up again. Okay, I'm trying to see if there's any other places where it's more apparent. Look at this candle.
But Vinay, one other fundamental question. So these orders are kind of lined up, right?
Yeah.
For next, like I have set some buys, you have set some
Mm,
lows, and all
mm,
of that.
mm,
So looking at the futures,
mm,
can this graph be drawn? Or I mean, because when I look at Robinhood, I can see all the orders like that are coming up, right?
mm,
10,000, 4,000, 2 for 142,
mm,
4,000.
mm.
So looking at that, is there a way to predict a trend, or
No,
this trend is always looking backwards kind of thing?
it's always about actual execution.
Execution, okay.
Okay, because you cannot predict what's going to happen in the future, right? The reason for that is because actually what a lot of people do is they do something called spoofing of orders.
Huh.
So they'll just put the order, and then people look at it and then say, "Oh, there's so many orders which are very high, so let me buy."
Huh.
Then they remove the orders. The minute they start seeing price moving in that direction, they'll remove the orders.
Okay. Okay. I've seen that
Okay,
because
so
in
they
Robinhood I
actually
used to see
do
there are
those
a
kind of
lot of
tricks also.
orders in the top and lot of less orders in the below. So
Yeah, so it's quite possible. I mean, it could work out, or sometimes it may not work out either.
mm,
Okay, so see here, for example, this one. The price came all the way back to this order block and then went up. He changed the direction, right? So this was a high probability order block. So sometimes order blocks can do this also.
so in this case it came down, it
Hmm.
found
Because it came to a random place, right? You don't know why it came here.
yeah, but it came
Then
down
if you
because of
look towards the left, then you'll start seeing, oh, there's an order block here. That's the reason it came up to this point.
yeah.
Okay. So order blocks can be also be used to take entries sometimes. Okay. So the other option is fair value gaps are also another places where you can take entries. So we'll discuss how, meaning what is the right way to take entries and things like that a little later. But but these are the reasons why price moves.
Mhm.
Okay, and these are the most important elements of price. So because if you look here, there are lots and lots of order blocks, but nothing, it didn't seem to make a difference, right? But on the way down, this particular one seemed to make a difference.
Why is that?
I don't know. Could be
Uh,
any reason. Okay, there's a good reason, but okay. Probably a lot of orders were accumulated at this point for some reason.
mm,
Let's
it's
just look.
from 0.5.
Yeah, roughly. If I use this, it's 0.5. If I use this, yeah,
That's
roughly 50%. It came
yeah.
close to 50% and then said, no, I don't want it to go below that.
So it's a
So it upped it.
premium and discount, right? Came till the
Mm,
discount
yeah. If I use this candle, then it's exactly 50%.
Mhm.
average account.
So whenever we are looking through, we should look at all of these
Yeah.
before
So
we even take a trade.
exactly. Yeah. So it came and then so see, this was a really big candle. So this was probably because of some news. Okay. And so that's the reason this became important. We'll also look at time. Okay. Because based on time also, then you will realize that some auto blocks are very significant and some are not significant. Okay. Time becomes a big criteria as to why and why a price behaves in a certain way. We'll go to that a little later. But these are the basics. For now, what you need to understand is there are order blocks. There are all of these gaps that we discussed last time, and there are the some of these order blocks can be mitigation blocks or breaker blocks. Okay, breaker blocks will basically essentially ensure that it gives resistance to price crossing it. Mitigation block will offer resistance initially, but it will get traded through. They're not that strong. Okay, so mitigation blocks tend to be those order blocks or breaker blocks which failed.
Mm,
Okay, and allowed price to trade through. That's the way you need to look at it. But these are good places for you to kind of decide what should be my target.
mm,
Okay, so then you will use something like this premium or discount, or then there are few other ways of actually looking at it to decide, okay, which PD array makes more sense to target. If you look at it, there are no fair value gaps here at all,
mm,
right? Up to this. So if you said, oh, maybe it'll come all the way till here, some people would have, they would have gone short, and then they'll say, okay, it's going to go all the way till here, and then it just goes in the opposite direction. Okay. And if you know all of these things, then you will start realizing that, okay, maybe some of these things, if you look at it, went all the way up. There were only 2 points here, the first point and the second point, where, there have probably been a lot of orders, okay, which have been accumulated. So it came till here, decided I had enough orders here, and then went off.
Yeah. And Vinay, one more
Hmm.
fundamental question. So all this is all supply demand, right? Everything, but these shorts and puts and all that
Hmm.
has no impact to the stock value, right? I mean, these
No, it does. It does.
I mean, if you have too many shorts or too many, that will not move the stock price, correct? I mean, that's
No,
depend on just the
not
orders.
directly, not
Yeah,
directly, but
exactly. Yeah.
it does. See, end of the day, they're just derivatives of the underlying stock,
Right.
right? So that means that when you say I am taking a long
Uh,
call, I'm taking a call option, you're actually saying I'm putting 100 shares as my collateral for taking that long.
hmm.
So it
So
is
the all.
affecting because that is volume which is getting generated.
Oh, that volume is part of the order book then?
Not directly.
Right.
Okay, not directly,
So then
but
if it is not in
it
the
is
order
still
book,
a,
then how it will influence, right?
no,
So,
no, meaning it is there, meaning people account for it, but it's not something that you can view directly
hmm.
because it will get shown separately when you look at the order flow in the options chain.
Yeah, yeah, in the option
So
chain.
that option, the volume in the options chain will not probably get reflected here.
Yeah, yeah.
Okay, but how they do it, or it might get reflected. It's just that you cannot separate between where you're actually buying the stocks itself versus buying the options. You cannot differentiate that.
Yeah, differentiate that. Because the way I'm thinking that if I'm like me, like us, like 100 people are
Mm,
buying and
mm,
selling, which creates this kind of a trace.
mm,
But for it to go down like 120, I am putting $1 million, let's
mm,
say, or
mm,
million shares.
mm.
That has no impact on this trace, right?
With a million, yes, it will.
Okay.
With a million orders, yes, it definitely will
Not
have some
orders, but
impact.
shorts.
Yeah, it will.
It will.
It will.
Okay.
Million is a lot, right? We were talking when we saw that it was a few Ks,
Uh,
6K, 600K,
yeah.
right? But if you're talking about six orders or six shares or six 600 or rather six calls, right? Which is 600 shares.
Hmm.
Yeah, that won't make a big impact. But accumulation of all of these orders, probably yes, it will get reflected in some way.
From the derivatives. Okay.
Yeah, yeah.
Mhm.
Okay. So there will be some impact. For example, the S&P 500 is traded the most. It's the most the one which has the most amount of volume,
Hmm.
right? On the Nasdaq, it's a lot less volume.
Hmm.
Okay. So that is why the Nasdaq moves very quickly up and down, whereas the S&P 500 doesn't move that much. If the S&P 500 moves like 10 points, 20 points, it's like amazing. Nasdaq will move 200 points.
Okay.
Okay, so Nasdaq is a lot more volatile compared to S&P 500 simply because of the number of people participating in it.
Yeah. So now tomorrow Fed's decision is there. So go
Not
it'll go up.
decision, it's just a speech.
Yeah, it'll go
But
up. I think.
every time these guys do or say something,
Uh,
it'll always be. See here also, for example, if you look at this one.
Hmm.
This
Then
was
it
the
went up.
this was the mitigation block. Came here and then went up. So if you had taken a short here, this would have been your target.
mm,
This would have been your first target to take off. You still held. Don't hold beyond this because you never know if it's going to come till here.
Hmm.
So, so like that, now you can take anything. For example, let's go to 5 minutes. this will be the same. Yeah, this hasn't happened yet. This has already happened. Okay, this was an order block here. This one. So this will become significant at some point of time. So this way you keep looking at it and then you'll realize, how price action is moving and how it starts making a lot more sense.
Mm.
Go to 1 minute chart. Let's see. See, even on 1 minute chart, same thing. Price went up, came here, and went up. In this case, you have to include this candle also because the whole thing becomes enveloped. So it came all the way here, then again went up, and then it failed and came down.
But it would give that order block shape only, right?
Yeah,
Yeah.
this one also see. Huge candle, an order block. They did not allow it to go beyond that. They went there, took all the orders, and then came down. So these are the people who mitigated their orders here. They sold because they wanted to go long. They broke even in this area. And then it went down. And finally, it went. It's still not crossed that, but yeah.
Mhm. Interesting.
So next area of resistance is going to be this. Take this across, and this is the area which is going to be the next resistance. So, so now these are the basic building blocks. Okay, of the PDR. There are a lot more PDRAs. Okay, but these are the most important ones. Okay, and at least for me, the toughest one was the breaker block. Okay, trying to identify the breaker block because that's a very good pattern for identifying an entry point. Okay, so the way, if you look at it in terms of pattern, this is how it's supposed to work. Okay, uh, high comes here. This is the higher high, and then it goes down. The minute this goes down, sorry, beyond this, okay, then this becomes a breaker block. The idea is that this becomes a breaker block. Okay. The
Mm.
reason is because this is the highest high. Okay. From beyond which it price went up. The point is the minute it crossed this, then this became a order block. Okay. So then you start considering that, okay, since this is a thing and it went down, so if price again tries to go up from here, it will get resistance and then it will continue down. That is the idea.
Mm.
Okay. So you have to recognize this pattern. If you recognize this pattern, then it becomes very easy to take a trade. Okay. And of course, it's the ulta on the other side. So keep looking for this pattern, and then you'll start realizing after some time, okay, this is how I recognize it. So far, I've not found a single indicator which actually does this correctly. Okay, so don't rely on indicators for this. Same
Hmm.
thing even for order blocks. I found most of the indicators don't do a good job. Okay, for fair value gaps, it makes sense. And they are always good. But mostly the indicators they don't show all of the order blocks. Okay. and they do stupid things like they just show the wick and things like that sometimes.
Yeah.
Mm.
And
And unlike fair value
relying on
gap,
these indicators doesn't help because it's programmatic, but sometimes there's a little more logic to it because sometimes you have to include the whole candle, sometimes you have to include a group of candles. Okay, it all depends on the perspective that you're bringing to the price action, and
mm,
then based on that, you need to kind of take a call.
mm.
Okay.
So unlike the fair value gaps where the
Hmm.
order has not been executed,
Hmm.
this this kind of order block, the orders have been executed. That's why it
Yeah.
is trying to change the direction, right? So,
Yeah.
so when it comes back to order blocks and finds resistance,
Hmm.
the logic is that that they have already executed the trade, but there are too many orders in that block. That's why
Hmm.
it is finding resistance.
Yeah. Kind of.
Okay, okay.
Okay. For example, if you look at the higher time frame, right? If you want to apply the same logic that I was trying to do, let me use the highlighter. Okay. High, low, higher, higher, low, higher, high, then went down. Okay. So now, oh, come on. This is a breaker block.
Like,
Okay. So it depends on the time frame that you use. You can
mm,
also say this could be a breaker block. Okay. It all depends on how you look at it and how you decide. But since this is a huge wick, you can do it this way. Or you say, I'll ignore the wick because it's too big. Then you start saying, okay, maybe I'll ignore these wicks. Then this becomes more of a likely candidate.
mm,
Okay, so you need to look at it because sometimes you're looking at a smaller area because you're not looking at a trade which is so big, right? Then you're just interested in this area because you want to finish off here. So you come here, then you take a trade here, and then goes down and you exit here, and then you're done.
Mhm.
Ah, okay, get rid of it. Okay, so this was the most important PDRAs. There are a few more PDRAs. For example, there's something called a rejection block. Rejection block is essentially if you look at the last candle at the top, right? This wick, okay, since it's a long enough wick, this is called a rejection block.
What does rejection block mean?
Means basically price got rejected at that point. So it's called a rejection block.
Mhm.
mm,
Okay, so that is all. But I have not found much of a use for it, to be honest, because you
mm.
can't take a trade from that. Meaning there are ways to take a trade, but it's too difficult, so there's no point looking at it.
It's the highest point, right? I mean,
Yeah, it's just the wick of the highest point.
yeah. So only the shots if you want to take, right? On this.
Yeah, in this case, shorts, yes. Okay, but they're useful because sometimes what happens is that you see that price will reject on the wick, in the wick area.
Mm.
Okay, so then, for example, here, if you look at it, right, it rejected in the wick area. So if you're looking at using rejection blocks, then you will only look at rejection blocks. Okay, and in this case, at least in this time frame, you don't have any other PDRA to look at. So you might decide that okay, I'll let me take use this rejection block as the reason. Okay, there are small order blocks here. It didn't reach this, but it had this.
So rejection block, I thought I understood that it is on the top where
Yeah,
nothing got
usually at the top, yes. But it depends on how you frame the trade, right? Because it went here and then went up and then came down. So you can say, okay, fine, this is a swing point for me. And then you can use this as a rejection point.
context matters.
Okay, so context matters. Okay. But So far, I haven't found much of a use for rejection blocks. Okay, and then there is one more called RDRB, which is redelivered rebalance, but then I need to explain a little more for that.
Okay.
Mm.
We'll
I
get
think
to it
it's
when we get
already
to it.
going here now.
Exactly. This much, if you can absorb, this is mostly all you need for understanding price action.
Mm.
Okay, so with this, you'll be able to explain clearly, oh, okay, why did price come till this point? Oh, this is the reason it came. Oh, why did it move up? Okay, this is the reason it went up. You'll be able to explain in hindsight, this will become very useful to explain the charts.
Mm.
Okay, it doesn't matter which chart you take and how, even on stocks. But like I said, stocks is always difficult to, you know, look at. So what?
So
Live.
I maybe just need help to mark the fair value gap, like
Huh.
in the chart.
Hmm.
I can share my screen, but once
Yeah,
you're
share it. Yeah.
so, can you see the screen?
Yeah, just hold on.
Oh, we can share a tab right now. It's not- So I have these three fifth tracement, land box, info line, and price line. Is info line will show me the fair value gap?
Info line will not show you the fair value gap, but you
Okay.
can use it to draw the fair value gap. Yes.
Okay, yeah, that is true. But if you have to automatically see the fair value gaps, then which one is that?
You no, for that you will need an indicator.
Okay, what I need to do there?
Just go there, search for fair value FVG. So choose
Oh,
one of them, not sessions. Don't use session. Use the first one.
nephew.
Or yeah, wait, there is okay, fine. Oh,
You can use ICT imbalance, right?
yeah, you can use that. Or you can use there's lots of them. The one that I use is that one next one.
This one?
No, below, below. Yeah, that one. I use that one. You- It's fine. You need to remove the previous one. Close this. No, close it. Remove that the one that you had added.
How do you remove
FPG
that?
nephew Sam.
Yeah, remove that.
Just on it. Over on it. No. Close this.
Uh,
Over here. FEG ಅಲ್ಲಿ ಕೆಳಗಡೆ FEG nephew Sam ಅಂತ ಕಾಣಿಸ್ತಾ ಇದೆಯಲ್ಲ.
Left top, left
ಲೆಫ್ಟ್
top.
ಟಾಪ್ ಆ
ಸ್ವಲ್ಪ
ಪಿವಾಟ್ಸ್
ಕೆಳಗೆ,
ಹೆಚ್ ಎಲ್ ಅಂತಿದೆಯಲ್ಲ ಅದು ತೆಗೀರಿ.
ಕೆಳಗೆ,
ಪಿವಾಟ್ಸ್
ಕೆಳಗೆ, ಕೆಳಗೆ, ಕೆಳಗೆ. To your right. Remove
ಇಲ್ಲ
those two.
remove that.
ಅದನ್ನು ತೆಗೀರಿ ಮತ್ತೆ FEG Sam ತೆಗೀರಿ.
Okay.
Remove that also.
So ಇದು ಬೇಕಲ್ಲ ರೆಫ್ಯೂಜಿ ಸ್ಯಾಮ್ ಬೇಕಲ್ಲ?
Yeah, you can use this also. It's fine. Anything.
ಇದೇನ್ ನಿಮ್ ನೆಫ್ಯೂದಾ?
ಹಾ.
Mhm.
Oh, your nephew, is it?
No, no, no. It's a guy called nephew Sam.
Okay.
ಓಕೆ,
I thought,
ಇಂಡಿಕೇಟ್ ಹೋಯ್ತಂಗ ಅದು.
Go
ಈಗ
back there. Now, yeah. Now choose that. No, don't do
ಅಲ್ಲ,
that.
ಬ್ಯಾಕ್ ಹೋಗಿ ಜಸ್ಟ್ ಒಂದ್ಸಲಿ ಕ್ಲಿಕ್ ಮಾಡಿ ಅದನ್ನು.
Yeah, that's it. You added it twice.
ಓಕೆ
Okay.
ಓಕೆ
ಅದು ಇನ್ನೊಂದು ಡಿಲೀಟ್ ಮಾಡಿ.
Uh,
ಓಕೆ ಓಕೆ
okay. So this gives you both FVGs and volume imbalances. So that's
ಓಕೆ
why I like this.
ಓಕೆ
Automatically does that.
ಪರ್ಫೆಕ್ಟ್. ಎನಿ ಅದರ್ ಇಂಡಿಕೇಟರ್ಸ್ ಆರ್ ಹೆಲ್ಪ್ಫುಲ್? ಬೇಸಿಕ್.
There are lots of them, but it's okay. Don't you get overwhelmed with them.
This is good. At least this one you said is more accurate, right? In that sense.
Mm. Yeah, this is fine. This will work.
Mm,
Okay.
good.
Okay. I think that's enough for today.
Yes,
Okay.
sir.
With this, now you guys spend time on the charts.
Yes.
And then if you want, we can catch up again for like 15-20 minutes anytime.
Okay.
Okay. And then you can just go through the chart like this, just like this, and then say, oh, look, this is what happened. This is what happened. We can just kind of do a review like that.
Yeah,